entire thesis is this market is going from 2.7 trillion to, call it 12 trillion this cycle, to 100 trillion by maybe the end of the 3032 cycle.
Wow.
So this is, I think, in front of us, the largest, fastest accumulation of wealth in all human history.
What's up guys, Kevin Cage here with another crypto update. I really hope you enjoyed today's video and let's get into it. So right here, shared by Good Morning Crypto, is a clip of Roth predicting the crypto asset class within this cycle to reach $12 trillion. And I know thinking of that percentage growth from where we're at today seems a bit crazy, but we're going to look at the price charts as well. We also have the Bitcoin halving date coming up very soon. Now looking at the total crypto market cap on the weekly time frame, looking at the previous cycles, drawing a fib retracement from the previous cycle's top to the cycle low, we did reach a perfect 4.236 Fibonacci extension right up there. So I find that interesting. I know that Bitcoin's market cap and Ethereum's market cap also reached a 4.236. Now if we look at today's price action and draw another Fibonacci retracement just to look at these retracement levels and the extension levels, we've yet to create an all-time high price reaching any of these golden extensions. Now in the previous video I uploaded a Fox Business interview that happened today of Brad Garlinghouse, the CEO of Ripple, and he still believes the crypto asset class this year reaches $5 trillion in market cap up here. So that's around the 2 extension, and last cycle we reached a 4.236. So the 4.236 at $10 trillion is more aligned with Medico's and Ripple's prediction of a $10 trillion crypto asset class by 2030. Now we're seeing Roth predict a $12 trillion crypto asset class in this cycle. Now looking at the Bitcoin monthly price chart, this is what we're waiting for, the first major move into all-time highs. Not just wicking above like we did in 2017, crashing back down, and then 2 months later we got the first move. We're waiting for that first major move for confirmation. Like in 2017 and early 2021. When we get that first move of Bitcoin at 80k, 90k, or 100k plus, I am super excited for alts. Now looking at last cycle, we have the total crypto market cap on the left hand side and we have Bitcoin on the right, both on the weekly. So this is Bitcoin's previous cycle top up here, this wick. When it broke out and went into all-time highs up to 69k, we'll call it about 247%, maybe 250% more or less. We can see the week of December 14th, 2020, Bitcoin moved first, and the total crypto market cap followed behind, breaking into a new cycle high a few weeks later. Now measuring from the previous cycle top, that wick right there, up until an all-time high, where are we at? Right around 290%. So Bitcoin, depending on how accurately you really measure from this wick up into an all-time high, we're saying 250%. And the total crypto asset class went up about 290%, maybe closer to 300%. So about 300% versus 250%. So the crypto asset class moved another 20% higher. I also want to emphasize when the crypto asset class took out its previous cycle top, moving well over 290% to an all-time high around 3 trillion. During this time when Bitcoin is well above its previous cycle top, the crypto asset class's market cap is into all-time highs. This time there were a variety of assets that did multi-100% moves and a variety that did multi-1000% moves. We had high caps doing 5x's, 10x's, we had mid caps doing 20x's, we had XDC do another 40x return after already doing a 100x return during this time, and even small caps and micro caps like DAG doing a 70x. So looking at today, what would be the percentage return to get up to Brad Garlinghouse's prediction, also Raoul's prediction of 12 trillion? From today to a $5 trillion crypto market cap up here around the 2 extension, that would be over 100%. And going to a $12 trillion market cap, that would be closer to over 400%. What's important to know is whether it's 50%, 200%, or 300%, those types of moves for the entire crypto asset class mean alts go up significantly more. And per the previous cycles over the past 10 plus years, this is still based off of Bitcoin and how high Bitcoin can go first. And what we know about the crypto asset class is the markets move in cycles. Maybe some cycles are longer than others, maybe some are shorter, maybe some draw higher, maybe the waves are a bit different, but they are cyclical. And the crypto asset class is not going to zero. It's the same thing every single cycle, every bear market, MSM, people that are down in their investment, they say the same thing. The Bitcoin price chart is in an uptrend. We are witnessing the tokenization of everything. Of course, I wish it could happen like that, but that's not how the world works. We know the tokenization stats by BCG of a $16 trillion business opportunity discussing $10 trillion tokenized by 2030. We also know the high case of over 60 trillion. An asset class that started at zero, started pumping, dumping, pumping up to a $3 trillion all-time high is not going to zero. It is drawing waves and we're early. We're sitting at a $2 trillion asset class. Bonds is $100 trillion, real estate even higher, the global equities market over $100 trillion. And arguably, if you include things like financial contracts and derivatives, which are highly intangible, this can be much, much higher. And if any of these projections are even remotely close over the next few years, this will be the largest wealth transfer in history. We have Crypto Caesar sharing this, and I do think this is interesting, and he shared this before. Bitcoin during previous cycles, when it takes out its previous cycle top, how long is it up there until it reaches its cycle top? So from the point when it even just wicks into an all-time price and later finds its top, ballpark around 300 days. Again, we know the future can always be different, but that is interesting when we're looking at the last 3 cycles. Next up, shared by CryptoSec, a really good follow on X. He was early into QNT, always sharing great information. So here he's sharing some information about Say. So this is a relatively new project, it has done very well, and there's a lot of upcoming projects in this space that aren't even launched yet. So what could the new big projects be over the coming years, potentially in the top 10 and top 20? I'm excited for Peak Network. I know that they have yet to launch on mainnet for Peak. They have the testnet, and then they have the Canary Network with Crest Network, which is live on Kusama. And these types of applications in the DePIN sector are so interesting. There's such a wide range of use cases, and this is what crypto stands for. And I know some investors prefer microcaps and teach their own. I know Peak is VC backed by Borderless Capital, DWF Labs. Its tokenomics aren't absolutely amazing. I actually really like the tokenomics of Crest Network, their Canary Network, but they're building real applications for the real world with real partners. And I know many of us already recognize some of these names below, like Bosch. In the convergence of AI, supply chain, real world assets, even tokenized machines, it's all happening. So for the past couple months, I've been reading a lot more about different applications they're building. Even Web3 applications that could compete with or even replace Uber and Lyft in the future. The internet of cameras, car charging stations, energy tokenization and finance, flight tracking, noise pollution, all types of use cases. And the really cool thing about some of these networks is they have that flywheel effect. They incentivize users to build, further decentralizing the network, making it more robust. And that very thing is the thing that can be very powerful for some of these assets when they get network effects and mass adoption, which we haven't seen. I know banks, governments, and large companies are using some of these applications, but I have to emphasize this is not mass adoption. That's something we have yet to see for the crypto asset class, and when that comes, that's when the trillions upon trillions of dollars enter the asset class and likely stay there. And I've shared this before, this is shared by Van Eck, the state of tokenized real-world assets. In 2023, the total market cap of tokenized real-world assets increased to more than 300 million. With the target being closer to $10 trillion this decade. Bottom line, we haven't seen anything yet. We also have shared by the Linux Foundation, Dr. Lehman Baird from Hedera. DLT 2.0 is about practical, functional use cases that actually matter, not just monkeys. And I want to share this quick clip of Hedera's co-founders discussing quantum computing, and this is super important.
Is Hedera secure against quantum computers? All right, so we're in really good shape. So here's where we are in Hedera. We use 4 cryptographic primitives. We use hashes in the hash map. Okay, so we have the hash graph that has hashes in it, and we have the history of everything that's ever happened that's tied together with hashes, sort of like a blockchain. So we have hashes all through the system. And we use SHA-384, not 256. Why do we use the extra bits? It's so that we're CNSA compliant, which is, the government requires that for top secret information. And why does it require it? Because it is, we believe, secure against giant quantum computers. So the belief is, even if you took, all the atoms on Earth and turned them into giant quantum computers, you would not be able to break SHA-384. SHA-384 is thought to be secure against quantum computers forever. That's pretty good news. And we use SHA-384. Most blockchains use SHA-256. Theoretically, quantum computers could break it, so they'll someday have to go to 384. Although, to be honest, I think 256 is secure enough.
Next up, shared by Crypto Eddie, some big news related to BCB Group, a settlement network for major crypto exchanges and market makers. Bitstamp, Crypto.com, B2C2 owned by SBI Group, Gemini, Kraken, etc. And they rolled their digital asset custody operations to Medico's flagship platform, Ripple's company. So I have some older threads a few years ago discussing BCB, and we can see on Medico. BCB Group, a leading provider of business accounts and trading services for the digital asset economy, has successfully consolidated governance of its digital asset custody operations on Medico's flagship custody platform. Medico's custody in order to achieve the highest standard of compliance, security, and agility. allowing BCB Group to consolidate its custody technology landscape into a single platform to secure and govern its digital asset operations. So BCB Group will leverage this highly scalable and secure platform as a fully managed service deployed in the cloud, enabling the company to take its commercial offerings to the next level. BCB Group is supported by IBM's Cloud HyperProtect services. Now, speaking of IBM Cloud, Casper Network is an integrated service into IBM's tech stack. This is an actual partnership. I know people are retail investors today. They see the prices, they think it's a complete joke, and they don't see the building. I'm going to play this quick clip of Ross McKay over at Casper Labs.
We see huge potential for the Casper blockchain and blockchain to really play a role in providing auditability, transparency, and addressing some of those issues that AI solutions can have around the fact of it being a black box, needing to apply brute force in order to retrain if you get any negative outcomes, and also, crucially, the third part is needing to be compliant with the incoming regulation across the world. And what we've heard is that companies, builders, as they're looking to apply AI to any number of use cases in their business, they're doing so in a way with one mind on it being responsible and ethical. But of course, with regulation like the EU AI Act coming in, they need to be compliant. And that's exactly what our solution, our AI governance solution, alongside the Watson X platform from IBM, will do. It helps give companies the ability to prove from a third-party independent manner that they are compliant and that they can deploy AI solutions quickly and effectively.
And one last thing in today's video for XRP, QNT, even XTC, this is super interesting. I have to finish up this video because I'm running out of time, but we have a bunch of information in the next one. So this is a great thread put together by Anders, and you have to speculate in this asset class. There's such a thing as healthy speculation. So Anders is retweeting, or I should say reposting now that it's on X instead of Twitter, the Bank for International Settlements, the BIS, the central bank of all central banks, discussing in the Finternet, unified ledgers would not only improve existing financial transactions, but also make entirely new financial products and transactions possible and empower individuals and businesses. So he shared his thoughts here and connected some really interesting dots. Seems like Karsten has the view of many unified ledgers working in unison, catering to different use cases, not one winner takes all. Referring to, what's his first name, Karsten of the BIS. Anders believes it looks especially good for QNT, and here's why. All of these unified ledgers would need to communicate and interact. The paper mentions standards and open protocols. As many know, Quant has been working as a key contributor to the Internet Engineering Task Force, the IETF, to develop the SATP, Secure Asset Transfer Protocol. Lately, we've seen a lot of breaches of crypto bridges. Using API gateways would be much safer. It does mention unified interledger protocols. Not sure if it could mean ILP that we're familiar with, perhaps in some situations. An interledger protocol with Ripple's connections has been trialed by major central banks such as the ECB, or the European Central Bank, with the Bank of Japan and another proof of concept with the Bank of England. The thing is that they're not going to use any random technology for interoperability. It has to be tried and true. You need to work with large international organizations and standard-setting bodies. A day before this paper, we got confirmation that Quant was involved in the Regulated Liability Network (RLN) to provide interoperability and programmability. This regulated liability network's vision is also of a shared ledger. And the BIS and these other central banks in this paper talk about current innovation and what we don't know, which is the future winners. Who will the winners be? So it has to be entirely future-proof, not just built or reliant on a single network. So that's why it's very important for a lot of these networks to be modular, maybe upgradable, and be able to adapt and be customizable. And this is something that the CEO of Quant has mentioned on several occasions, and by using Overledger, the operating system of Quant Network, to provide interoperability between unified ledgers. It's really easy to switch between whichever ledgers you wish to use in your applications, meaning it's future-proof. In a single MDApp on Overledger, you can make use of several different ledgers in the same decentralized application, so this is multi-chain. If you wish to use XRP for the settlement part in some other blockchain network for the smart contract, you can do that. And this provides a lot of flexibility, and this could be especially good for something like XRP because it lacks smart contracts on chain. And I know those features are being built out today along with EVM compatibility and interoperability with other chains. Overledger provides seamless interoperability between private, permissioned and public, permissionless DLT, so it's going to be a huge combination. So just noting that Overledger works together with blockchains, DLT, even legacy infrastructure. It's not here to replace things, it's here to augment it. The whole pie will grow. As an example, both XRP and XDC are integrated with Overledger. And what this could mean for different types of decentralized applications for tokenization, cross-border payments, trade finance, etc. So I find that super interesting, and I do strongly believe the future is going to be multi-chain. And a huge thank you to everybody that watched all of this one, and I hope you enjoyed. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.